Good evening, everyone. You know it's a special day if I'm live 2 days in a row, right? I'm excited about this evening's live stream because I get to speak with another expert about something that I'm asked very often. So, if you are a US citizen, I feel like it's kind of part of the American dream to own a home. Maybe not with the white picket fence. And, that dream has changed a little bit. Maybe it's a condo. Maybe it's not the ranch home or anything like that now. But in my sphere, the people that I work with don't think that that part of the American dream is obtainable for them because they owe back taxes, right? So, with that, that's right in my wheelhouse. And if you don't know that, I'll take the time to introduce myself now. My name is Timalyn Bowens, and I'm America's favorite EA. As an enrolled agent, I'm licensed through the Internal Revenue Service to represent taxpayers in all 50 states. And as a matter of fact, if you're a US citizen, I can represent you before the IRS wherever you are in the world. This includes, but isn't limited to, removing tax liens so you can sell your home if you owe back taxes. It also includes if maybe you have a tax bill that you can't pay in full, getting you in a situation where you can qualify for a mortgage. But I'm not going to go into those details because my guest is going to handle that. But if you are in that situation now and you need to get some tax stuff cleared up so that you can qualify for a mortgage, I'm also the owner of Bowens Tax Solutions, which is a virtual firm based in Louisville, Kentucky, and that's what we specialize in. So once we get the tax issue taken care of, whether we have you in an arrangement that is going to satisfy the IRS and not bankrupt you, what do you need to do to qualify for the mortgage? People ask me all the time, but that is not an area that I'm an expert in. So, what I've done is I have a guest this evening who is an expert in this area. So, this evening, the award winning mortgage broker Dante Royster is going to be joining me to share how to qualify for a mortgage. I met Dante earlier this year on LinkedIn. He has a podcast, the Epic Spotlight podcast. He's also an author. He's written the book, The Ultimate Mortgage Guide. But I know I can't do the introduction any justice, so I'm going to go ahead and bring him on with me tonight. Dante, thank you again so much for joining me tonight. I'm excited about the conversation that we're going to be having.
Likewise, thanks for having me.
Yeah, absolutely. So, before we get too far, I do want to make sure that I am showing up on LinkedIn. The people that tune in regularly know LinkedIn doesn't always want to be my friend when we're streaming. While I'm checking this out, though, I do want to say we have Carlos says hello there. Carlos,
Hello.
thanks for tuning in. We have another person on LinkedIn, and I'm going to ask you to charge my head, not my heart. With a name like Timalyn, I've been called Timbaland, like the producer, and Timberland, like the boot. So I'm going to say thanks for joining me, my friend on LinkedIn, but I do not want to butcher your name. All right. So you'll have to send me a voice note or something so I know how to pronounce that. So right now we got three on YouTube. Let me get over here on LinkedIn real quick. And as you all are hopping on, feel free to leave a comment if you have any questions for me or Dante. This is going to be an engaging discussion, so feel free to leave those in the chat as well. And if you're on LinkedIn, just make sure that you are giving StreamYard permission to share your comment so we can see it. Thank you for the thumbs up, Grace. So we are good on LinkedIn. Um, so Dante, as I mentioned before, you are an award-winning mortgage broker. I thought it was also very impressive that you were licensed in 9 different states. But one of the questions I like to ask people is, what is your why? So,
Sure.
why did you become a mortgage broker? And even with that, I may not have said it yet. You actually own your own company. So, why are you a mortgage broker? And then, what made you decide to start that company?
Yeah, no, thanks for having me. I really felt the need. Well, I guess we'll start back at the beginning. My why ultimately is always my family. I've been fortunate to have a great family from my mom, my dad, my wife, my kids. At this point, having kids and having, little ones, as I call them, my mini me's, they're looking up to me. So I got to be a role model. I got to be able to show them the way, the path. And, my family overall, especially with my mom, she's a teacher. She was a educator for over 30, 35 some odd years, where she taught people, and I always liked that. And so that concept really hit home on the financial side of things. There's a lot
Hmm.
of stuff that can be done in schools, but there are certain elements just of life that aren't really handled in the school setting. And when I started learning knowledge about, just money, budgeting, planning, investments, I felt that so many people are lacking that knowledge or lacking that skill set, and were so inquisitive that I wanted to provide that knowledge. I wanted to help them. And in the mortgage space, I kind of bumped into it. It wasn't something that at the dinner table we ever talked about as I was a kid growing up. So I was unfamiliar. I didn't know what a mortgage was, to be honest with you. First day, I just knew I had an ability to speak to people, and I've always had an ability to relate to all types of people. And basically, you know, we find common ground, and once we have common ground, and once they know me, like me, and trust me, we've had conversations in depth, and I've showed them ways to improve their situation. One of the ways you can improve your situation in America is by being a homeowner. Home owning just gives you so many just abilities that sometimes people don't even realize that they have. Obviously, the
Hmm.
first one is just to have a roof over your head. Obviously, that's a necessity. But gaining equity, and equity is the difference between the value of the house versus how much you owe on it, and all the things that you could do with that equity. And so as time goes on, people, living in these homes 15, 20 years, and they decide, hey, I never want to leave. I want to stay here. But they never realize that there's so much opportunity inside those walls. And I show them ways to get the money out of the walls, with a cash out refinance of some sort, and maybe make their dreams come true. And that's really how Epic Mortgage even started today. So I am a believer of sharing my story, and that's what I impact to other people to encourage them to fulfill their dreams.
Yeah, that's awesome. It's funny to me, like, I think the people who are most passionate about what they do are teachers. Like, I never, I didn't go into the tax industry thinking I would be a teacher, but I'm able to retain clients because they say, like, hey, you actually explained the process. Like, I understand it. Now, they don't want to do what I do, but they're grateful to understand it. And it seems like we have that, we're similar in that manner. Um, so with Epic Mortgage and, here in your tagline, you have broker owner. A lot of people that reach out to me, they haven't gone as far as to speak with a lender yet. They're just working with the realtor. So, for the audience, can you tell us the difference between a mortgage broker and a loan officer?
Sure. And there's a lot of synonyms, and there's a lot of
Mhm.
wordplay that is used. And so that's what sometimes makes it confusing. So any person that is licensed that can speak to you as you wanting to buy a home would be deemed and they have a mortgage license, is a loan officer. So we start off all as loan officers. Now, loan
Okay.
officers can work on a retail setting, they can work in a wholesale setting. And what that basically means is just who do they work for? And so you can work for a bank. So, BMO Harris, Chase, Bank of America, they could have loan officers that work for a bank, and they would be a bank loan officer. And then you also have what is called mortgage bankers. Mortgage bankers are a little bit of bigger stature, and they have a little bit of flexibility. Mainly, they try to, basically sell their portfolio, their lines, products that they have inside, but they can also
Mhm.
do some type of brokering out. Usually, a minimal amount of options, but they do want to give you a little bit of a variety, and that's a mortgage banker. So a mortgage banker, you may think of Loan Depot, Guaranteed Rate, someone of that nature. And then over here, you have mortgage brokers, which I am. So I'm actually an owner of a broker shop. So I'm still a loan officer if I was dealing with you directly, but I actually own the company. And we are a mortgage broker. A mortgage broker to me would be a small independent firm that is 100% flexible and free to choose who they want to work with as far as a lender goes. So, what I had to do was I had to get basically vetted by various private entities that are out there that basically offer the same type of products and maybe just a slightly different than all these different banks and these mortgage bankers. Some banks and bankers have a preference, right? Over time they say, you know what, I don't want to do any renovation loans. You know what, I don't want to do any investment loans. Whereas I said, hey, I want to help out everybody. I wanted to work with a person that had a 550 credit score, and I also wanted to work with people that had 850 credit scores. So what I had to do with a diversified, I had to diversify my portfolio. I had to get
Mhm.
lenders that specialize in helping people that have A credit. And I also had to specialize and find lenders that worked with people that wanted to do renovation loans and maybe deal with lower credit scores in all types of situations. So being independent can be lucrative, but I have to market a little bit, better and more than maybe the next. I don't have this $1 million budget or anything like that, that I can use, and you don't see my face on a billboard. So we've used channels like social media, we've used channels like networking and word of mouth to really, expand our business.
Yeah, okay. So yeah, that makes sense. Um, kind of the path to get up to be a mortgage broker. So the main thing that people want to know if they're tuned in right now or even catching the replay, can I buy a house if I owe taxes? And I think you brought up a good point, and you may mention this again. It's going to depend on the lender and a little bit more. But can you buy a house if you owe back taxes?
Yeah, and I think that, and I'll start off by going back to the broker, and that's why I really have always liked being a mortgage broker. I've been a mortgage broker now since 2007, so 17 years as a mortgage broker. I've been in the industry since 2002, and I've stayed as a broker because I've always wanted to stay flexible and able to work with different private entities that offer various products. So, you come to me and it's not one size fits all. I give you the variety that you're looking for. And so for people that have, tax situations, they don't have to feel discouraged. I have a lender for you. I just have to, kind of do a deep dive into your individual situation, but we have flexibility. So overall, if someone has, let's say they owe money on their tax returns, there is options for you. It's not the end of the world. So yes, you could buy that house. Depending on the denomination, can we set up a payment plan? Can we just pay it off outright? And we can do those types of things at the time of closing. It also depends on the type of person that we're talking about. Are we talking about someone that actually is buying a new house, or are we talking about someone that actually is refinancing a house? We
Mm-hmm.
have helped people buy homes even though they had a tax liability because the asset is not theirs up front. So, title companies have allowed certain people to be able to buy even though they had a tax liability because technically the house is not theirs until once they close. If you have a liability, let's say on your title, we're going to need that documentation. We're going to need that installment agreement that you set up with the IRS and see what your payment plan is. Now, there's a thing called debt to income ratio. That's where they look at your total debt and they look at your total income. Now, when I say total income, we're looking at a gross income. We're not looking at the net income. So this is, your money that you make before the taxes have been taken out. And so that ratio is something that we stare at quite frequently. So we will have to factor in the IRS installment payment plan on how much you're paying the IRS and add that into your debt to income. So as long as those numbers can work out, we can move forward and we'll be just fine.
Yeah, and thank you for bringing up the debt to income ratio because I don't know if it's because it's government debt or what, but people don't think about it the same way. Well, like, do you have a loan out on your car? Do you have student loans? Like, it's still debt. They want to make sure that you're actually paying it, though.
Exactly.
From my experience when I'm working with someone trying to purchase a house. Now, this wasn't something we discussed before, but if you could speak to this, because a lot of people that I've worked with that want to purchase a home and they owe back taxes, they are business owners.
Hmm.
So we have this situation where they will receive advice, and this is tricky when we look at the net and the gross, right? They receive advice where they're told not to write off expenses so they can qualify for a higher mortgage. Um, and I can speak to this. That's mortgage fraud, especially if you're going to go back and then put the expenses later to lower the bill. But for somebody in that situation who, let's say they're self employed, they're filing a Schedule C, and they're looking at their gross, realistically, is there a number that you tell them they should consider when looking at what they can afford?
It's going to vary depending on the state. Every
Okay.
state, because real estate taxes are really a huge impact on people's payments on a monthly basis. Now, I
Mm,
reside in Brookfield, Illinois, so obviously Illinois, Chicago, we have high tax, liabilities. Our real estate taxes are high compared to, let's say, Indiana, let's say to, a potential Georgia. These are states that I'm licensed in, so it really varies. But generally speaking, if you just want to have a general synopsis, most people are going to qualify for roughly somewhere between 3.5 to 5 times how much money they make. That's a rough number. If you were just trying to ballpark it and just have a feel, obviously it depends on where we're talking. But so I can speak to someone individually and give them a better. But if you're going somewhere, let's say 4 times how much money you make, I'll give you a good rough sense of like, okay, this is what I roughly would qualify for. And then until we get into the weeds of looking at your credit and obviously evaluating your income. Now, what I would say as far as business owners, what makes us different is we have the traditional income that we use. So traditional income, like you're saying, is tax returns, W-2s, and we just say, okay, this is how much money you make, blah blah blah. But what if you don't qualify, right? Because you have all
mm-hmm.
these write-offs and you're like, oh my gosh, what do you do? Well, we have other options. We can look at alternative income qualifying products, such as we could go off just 1099 only. So if you're an independent contractor and you're only receiving 1099s, we could use the 1099s to help you qualify. Let's say you're a beautician or a barber, maybe we could just go off bank statements. We have a 12-month and a 24-month bank statement program, and we could just add up all the deposits and go that route as far as getting you qualified for a mortgage. So we have some flexibility, and we also have, if you have good credit in my estimate would be, over 700 scores. Ideally, the higher the better. We also have a no income verified asset program. So this is a situation where, like you were talking about, this potential client, hey, we don't even verify any income. And we just, since you have the assets and you have the credit, we'll allow you to purchase that way as well. Now, one thing will happen in the, I would say the non-traditional world, the alternative world, I will say, yes, it's going to be a bigger down payment. And yes, it's going to be a higher interest rate. The
Mm-hmm.
greater the risk on a loan, the higher the rate will be. So risk and rate kind of go hand in hand. So it's just one of those situations where, someone will come to me who's self-employed. They don't verify their income very well on their traditional sense on their tax returns. So we have to go a different route. but they're still asking me, well, can I get a down payment assistance? Can I get, can I, well, I'm a first time home buyer. Doesn't that mean anything? No, you've gone the alternative path. You're fortunate enough that there is a loan product for you, but now you're going,
Mhm.
there's give and take. So, with a greater down payment, we can still get you the house that you were looking for.
Cool. Yeah, I didn't even know that you could go off of like 1099 alone. And I think going back to what you said earlier though, you have all of those different options because you are the broker, so you get to decide which type of lenders you're going to work with. Um Carlos says great information. Yeah, it has been great information so far. Um and I don't have in the description of the video all of the states that you're licensed in, but if you were
Oh, okay.
tuning in, I do have Dante's website. And if you go to the website, you can see all of the states that he is licensed in. Um, if you're in that position and you think that you would like to work with him in Epic Mortgage, um, I mentioned earlier, so you wrote a book, The Ultimate Mortgage Guide.
Yep.
So I like things like that are tangible because sometimes people have questions, but maybe they don't want to reach out directly, or somebody may look at that list and be disappointed because, oh man, they work in a state that you're not licensed in, but they still like your style of teaching, the way you're breaking down everything. I don't want you to give me the whole book,
Sure.
but what would you say are two of the top priorities that somebody should take care of if they're looking to purchase a home within the next year?
Yeah, I would say, first off, I would say the book, what I wanted to do with the book, the reason why I wrote it was there, I've been doing this now for 20 plus years. So it's kind of crazy just thinking about that. I've been around the block, I've dealt with a lot of clients, helped, well over, 1,000 people, get their homes and stuff like that. So there is common questions that so many people, you know, every day ask, and they're truly the same question. It's just a different person saying it. So I wanted to kind of, create a book because, I just felt like our school systems have really just let us down in that regard of how to live and like, things that really matter. Like, most people, I think the number is, at least 69% of people are going to own a house. That's just one of those little milestones in America that is still relevant and important. It is the gateway to, having success. It's a gateway to, becoming a millionaire is having a home. So, why do people have the same questions? It's because no one knows. And so I wanted
Hmm.
to create a book that answers some of these questions so we could get past some of the, beginning stages and get into the kind of the meat and potatoes. And wanted to really just introduce myself to people, especially first time home buyers, people that haven't, been involved in the mortgage industry. The hard part about mortgages overall is that they constantly change. And I think I wanted people to see that in the book that, this was, hey, these were the programs this year, and here's the program that year. And just, actually, and this is kind of real life, it just happened today. I had a client buying a property, $211,000 purchase, single family house in Chicago. And he made a deposit. He made a cash deposit of $2,000. Now, the rule that has been given probably about 3 years ago was that any deposit of 1% or less of the purchase price, you don't have to verify that where the money came from. And so the underwriter, consequently was saying, hey, you need to verify this $2,000 deposit. And I said, well, no, the rule is 1%. I shouldn't have to. And so when we were having this conversation, the underwriter pointed out, well, no, you're actually wrong, Dante. The rule changed.
Yeah.
May 20th, 2024, that basically a cash deposit over 50% of what the client makes is not acceptable. So since it was over the threshold, you can't you have to verify where the money came from. So these little nuances that come out that tweak the guidelines. So it's
Mm-hmm.
constantly ever evolving. So you do want to have someone that is experienced, you know, for some, and probably similar in your world, like a TurboTax person. Yeah, there are going to be some people easy breezy. They could go anywhere and get a mortgage done, but there are people that have, really complex situations, whether it's an income situation, a credit situation, an asset situation, and they need some guidance. They can't just go, 1 2 3, it's easy. They kind of need someone to hold their hand, walk them through the fire. And that's really what I do. And that was my book is to introduce who I am, some of the things that you'll encounter, from documentation that you may need, from real life stories of people that had the same struggles, same issues as you, and just how we overcome them, how they got to see the light. And I wanted people to know that it's okay.
Cool. And for those of you that have tuned in, if you're on YouTube, I do have the link to the book on Amazon, so you can go there and buy it. Disclaimer is not an affiliate link, not making anything, but I did want to make it easier for you to go get that. I think that's a powerful resource. And like you said, in my world too, there are some things that are constant that get updated, upgraded, and but there's not a blanket answer for everybody in certain situations. Everybody's situation is going to have that little tweak that makes it different. Carlos asked, "Does Epic work in Pennsylvania?"
Thanks, Carlos, for asking that. So currently, right now, the answer is yes if you're an investor. So with some of our investor programs, we are able to help people in Pennsylvania. We are not licensed to do any primary residence. So I do actually have a client out in Pennsylvania. I think it's Erie, Pennsylvania, if I'm correct, that we helped out on a refinance of an investment property. So if anyone has investment needs in Pennsylvania, I'm definitely someone to call, but not yet on the primary side. We'll work on that. Give me a couple of years on that one.
Cool beans. And Carlos, you know where to get that information down in the description. Um, Paula, kind of echoing what I said earlier, she said, "Glad Dante has addressed self employment because it's been challenging to get a mortgage traditionally."
Yeah.
Yeah.
No, it's tough. I mean, and everyone goes through it. I don't care if you're a truck driver, you're selling cakes, and once again, part of my business is working with self-employed people. I get it. I'm self-employed just like you. I'm not Timalyn Bowens as far as tax returns, but I'm like a junior accountant. I should get certified or something because I mean, just the amount of tax returns I have to review, from prime personal tax returns, business tax returns, K1s. I have to look at obviously Schedule E's, Schedule C's, and that's on a regular basis. I'm really looking at the federal tax returns. I'm looking at, how much do they owe? Do they owe any money on these taxes? Okay, great. Did you pay it off? Did you not pay it off? Are you on a payment plan? Then I'm looking at your Schedule 1, trying to see, oh, okay, you do have extra income. And then I got to look at the Schedule C's if you're independent or if you have an LLC, or I'm looking at Schedule E's on an S corp or real estate properties. So I mean that is something, a part of my job as a loan officer for you, is stuff that I'm doing, and then I can, based on what I see, we can go with the recommendation like, hey, these tax returns are not going to fly. We're going to look at alternative, trades, excuse me, alternative income strategies for you, like the bank statement programs that we talked about, or if we can go 1099, make it seamless for you. But obviously, yes, you will have to bring, more money to the table. So generally speaking, minimum down payments are usually, 3%, 3.5%, 5%. But if you're starting to go into the alternative world, minimum is going to be 10%. But somewhere between 10 to 20% is most common.
Oh wow! So you gotta pay the costs for that alternative method. And nobody has asked this question. This may be me digging into tax stuff. Because you mentioned a hairdresser as an example earlier, and
Mhm.
a lot of them use like the Vagaro booking apps and things like that. Um, for that alternative documentation, would something like a 1099K be sufficient as well?
If the 1099 is in the individual's name, yes. If it's in the
Ah,
business, it would not work.
got you. That makes sense.
Yeah, so only if the 1099 is in the individual's name can we go that route. If it's in the business, then we're going to have to look at bank statements. It's going to be the best. And caution those self-employed people out there that are listening, because these conversations that I have. A lady in Michigan had like 4 or 5 bank statements. Like, well, sometimes I put it in here, and then sometimes I put it over there. I mean, it kind of condense it. We want to have a constant stream. Lenders are not going to be apt to want to add up 4 different bank accounts. They want to seem that if you have a business, one business that is going into one account, that makes the most sense. Make sure you have a business account. That's very important.
And as a tax professional, I can agree with that. I haven't done bookkeeping probably, what, 6, 7 years, but yeah, everything needs to go into that business account. And here's another example of why it needs to be streamlined, and you want to make sure you're not commingling and piercing that corporate veil. Um, so we've talked about the book. What other, if any other, services do you offer? So is there any type of not credit counseling, but like are there workshops or classes you do? I mentioned the podcast. So for those who may just now be joining, there is it's the Epic Spotlight.
Yeah, Epic Spotlight. That started in January of this year. I think what we've learned as business owners is that personal branding is so important nowadays. Appreciate that, Lola. But yeah, personal branding is so important nowadays, and so what we've done all as business owners is want to promote our businesses in all different types of fashion. So really got into the podcast. It was a way to kind of connect with people and talk to people about things over time that I was really interested in. So we really focus my podcast on health and wealth and love and happiness. Those are kind of things that mean the most to me. So we've had chiropractors, doctors, therapists, family therapists, really provide knowledge and wisdom. We've had business owners like Miss Bowens. You were on the show, and I can't wait for your episode to come out. And we've had other business owners, really, spreading advice, words of wisdom. We've had realtors on as well, really giving us, boots on the ground, telling us what's going on in real estate. And so it's been a great experience. I look forward to continuing to, meet people. And the best thing about it is that, since I am licensed in multiple states, it gives me an opportunity to meet new people, so had, talking to State Farm insurance agents in Colorado, speaking to insurance, life insurance people down in Florida. So really get a whole different perspective of, just different regions and how they conduct business. So it's been great. Epic Spotlight. Definitely check it out wherever you download your podcasts, or and we actually film the shows as well, so you can check it out on our YouTube channel as well, Epic Spotlight.
Absolutely. And that also is linked in the description here on YouTube. So, and I'm checking to make sure nobody has questions anywhere. Um, we've talked a little bit about, things that self employed people should look for. We've talked about the debt to income ratio. Is there any, I guess, last piece of advice that you would, again, this person would love to work with you. Maybe they're working on their budget and everything. A last piece of advice for anybody purchasing a home.
Yeah, definitely. I mean, first and foremost, uh, those uh, those seminars and those really coaching things, I'm going to take it. I'm going to go to the next level on that next year. I'm working on
Okay.
a certification right now, so I'm going to be a certified facilitator of some programs that are going to allow people where I can really get in a classroom setting and really work on people's budgets, planning goals, setting the right expectations. But I think for first time home buyers, I mean, there's different segments, right? So I'm going to try to speak to the masses, but from a first time home buyer level, just the power of waiting is not good. You have to move
Mm.
forward. You have to live in the now. There's so many people that want to pause and oh wait, who's going to be the president? Let me pause. And it's like, no, that's you have to live your life. The thing about investments is it takes time. And I know sometimes that's boring for some, but it takes the 10, the 20, 30 years to really see what you've created. And so you can't create something if you never started. So, the road to success is starting the path today. So I really encourage first time home buyers, work on your credit. It comes down to three things. I call it CIA. It's your credit, it's your income, and it's your assets. That's what it takes to be able to buy something. And so that's what I focus on with people. I say, all right, let's take a look at your credit. Your credit's going to dictate what products and programs are available to you. Let's look at your income. The income's going to determine for how much. And then let's look at your assets and see how much you're going to potentially need. It's not pretty necessarily always in the mortgage business because it's humans and we make mistakes. But if we can devise a game plan and then kind of follow that course, is eventually going to get done and get you into the goal that you want. And so from people that own homes, you're a homeowner. You don't have, my favorite saying is you don't have to be in a bad situation to be in a better one. Sometimes we get
Yeah.
complacent. Sometimes we get comfortable like, hey, I'm straight, I'm good. Always look to strive and get better. And the power sometimes are in the walls around you, the four walls around you. There's money there. And we have to extract that money because, sometimes appreciation, if you live long enough, you're going to see depreciation. Right now, we're seeing
Mhm.
appreciation. So that means the value of your house is going up. But sometimes I've seen it, been doing this for a while. I've seen it where it went down and all of a sudden the house is not worth it. So if you can take that money out of it and do something positive with it, whether you're investing, into, investments, or if you're just saving it for, a rainy day, but, make sure that you have an asset, but it's only an asset if you take advantage of it. It's a liability if you don't, because all you're doing is just paying a mortgage every month. So look at it as an asset and realize there's opportunities. And then obviously for the investors out there, people that are into real estate investing, it's great opportunities. We do offer fix and flip programs. We do offer, investment cash out refinances as well, where we don't have to verify income. So no income verified cash out refinances for investors. And those are great opportunities. And I work with the investment community quite often. I was able to help out a gentleman on Monday, get him a cash out refinance of a property that he bought. He paid cash for, he fixed it up, and then he was able to extract, $125,000, and that's
Oh, wow.
tax-free money. Yeah. So I mean, it might get cold outside where he is, but he'll be okay. So just stuff to consider, but it's always, it's always good to reevaluate your situation. I think
Mhm.
it's important. Sometimes we hit this milestone and then we want to forget about it, but it's something that, whether it's every 3 months, every 6 months, every year, we want to continue to evaluate, our situation. Can I be in a better situation? Can I put myself in a better opportunity? And that's so important.
Yeah, absolutely. That was some pretty solid advice. I feel like I should be over here like writing notes as well on
Appreciate that.
the investor side. Um, Again, Dante, thank you so much for being here tonight. For people that maybe they want to follow you on social media, or you already said the podcast is streaming everywhere. Where can they find you on social media? And if you want to share any websites as well, feel free to do so.
No, I appreciate that. Well, I have my website, which is www.danteroyster.com. So danteroyster.com is pretty a great website where you can check out some of the podcasts, guests that I've had on the show. You can read their bios, and then also too, it's got my preferred listings. So people that want to check out, just various homes that I'm connected with some of the realtors, great opportunity there. So if you're looking to buy maybe an opportunity, whether it's an investment or primary, check out danteroyster.com. And then obviously, if you're ready and you want to, get pre-approved for a mortgage, you can go right to epic.mortgage. So it's www.epic.mortgage. Now I try to be unique on that, and it kind of messed me up because people always want to put that .com. So you got to leave that .com alone. Where it's I was just before my time, I guess. But yeah, .mortgage. So it's www.epic.mortgage. I'm sure you'll see my face on there, so it's really my place, and we can get you going And there's tons of opportunities, whether if you're on DanteRoyster.com, if you want to just join my newsletter. I do have a newsletter that I send out weekly that really kind of breaks down the market and gets into the weeds a little bit. I don't want to speak over your head per se, but I'm introducing you to things that really impact interest rates. We've had a situation right now just trending where it was kind of amusing, where the Federal Reserve came out and they met on September 18th, and they said, "Hey, we're cutting interest rates," and everyone got excited. But actually, when the Federal Reserve actually cut interest rate, they cut HELOCs, car loans, credit cards, your CDs, but they don't cut mortgage rates. Mortgage rates really are impacted by the overall market. And so rates were already low. And they're like, oh, Dante, Dante. And so, and it's funny how news travels. So now you have people, like, oh, yeah, I heard the rates drop. No, the rates have actually been going up this whole month. They're not going down. But it's really just that lack of knowledge that people have on just how mortgages and mortgage rates in particular work. And so if you join my newsletter, you can sign up right at DanteRoyster.com. You can get some more inside information and get you just in a better situation where you're ready to make that move.
Thank you. Paula says, thanks so much for this great discussion and insights, y'all. And I'm going to echo that. This has been uh, insightful for me as well. Let me see. Carlos also said, thank you for the great information. And you all, like, seriously, like I said, we're connected on LinkedIn. Go show his podcast some love. And for those of you catching the replay, if you are in a situation, maybe you do have that tax lien, you do need that arrangement made with the IRS, you can set up an appointment to speak with me personally at www.bowenstaxsolutions.com. I hope you all enjoy the rest of your evening, and I will see you next week.
Take care.